Welcome back to Tax Talk with Hey Hey, where we offer simplified tax planning and mentorship to help 6 and 7-figure CEOs ditch the daily hustle by achieving financial independence from your business by increasing your purchasing power and diversifying your source of passive income. Through financial mentorship, realistic goal setting, and simplified tax planning, without having to hustle for the rest of your life, with the guarantee of the optimal roadmap to move you towards your desired time freedom. Welcome back to Tax Talk with Hey Hey. I am Suhey Piedra, enrolled agent with Prominence Business. We're located here in Glendora, California, but we're federally licensed to work with clients across the United States. So today I want to talk about cancellation of debt. We're supposedly in this recession, and there's a lot of individuals that find themselves having to make arrangements to have credit card debt canceled, maybe a car, loan canceled. The big one that I really want to focus on and talk about is the student loans. There's a lot of talks out there about, getting student loan debt canceled, and we all want that because it is such a huge liability that many of us out there have. And so what is the consequence of getting that debt canceled? Many of us didn't know or are not aware that even when we have those credit cards canceled by, Bank of America, Capital One, it doesn't really matter who the lender is, but when you get that debt canceled, you get a 1099-C. A 1099-C for the debt that was canceled. So let's assume that you had a $5,000 credit card and the bank said, okay, we're going to go ahead and get this waived for you and you no longer have this debt. Well, when the new year comes around, you're going to be surprised with a 1099 in your mail that you have to take to your tax preparer and report this $5,000 that was canceled. So what does the preparer do? Typically, they enter the form into the computer. That's all they do. And all of a sudden, you have to pay taxes on that $5,000. So what I tell clients is most of the time, there are ways to get the tax on that debt canceled. My biggest concern is with student loans because it's not usually $5,000 that we're getting canceled. We're getting canceled $15,000, $20,000. Some people are getting even more canceled, especially when these schools have gone out of business and the government is saying, these schools were not legitimate schools or, you didn't have the proper training and therefore these loans are being forgiven. Well, you can expect a 1099-C at the end of the year. And so all of a sudden you may end up with this 1099 that has, a $20,000, $30,000 debt cancellation. And so now you're going to be stuck with paying the taxes on that. So who wants to pay taxes on those dollars? What a surprise, right? I wouldn't be prepared to paying taxes on additional funds like those. So this message is for those individuals that find themselves in that situation. You want to make sure you know the rules behind this. There are definitely ways to get the debt that you got canceled and not have to pay those taxes. There are a few things that you could do to qualify. We would have to go through a list of things, but there are ways, and the majority of the time you do qualify. There was a reason why that debt was canceled. So if you are, if you have more debts than assets, which the majority of us do, especially with things being so expensive nowadays. So we want to make sure we look at all of the rules behind debt cancellation and we get that debt canceled if possible, tax-free. Because what's the point of getting that debt canceled when all of a sudden you're going to have to pay IRS a huge bill? So you went from owing the creditor money to now owing the IRS money. What kind of a benefit is that? So do everything that you can to find the right person. Call us. We can definitely help you figure out if you qualify for that. I would rather you use your money towards continuing your growth, towards investing it in yourself and something much beneficial for you than having to pay taxes on those dollars that were canceled to pay them to Uncle Sam. So some of the student loan exceptions that are out there that you may find yourself in is, for example, you're in a program where it says you have to work for the city, the county, the state, and they promise you that after an X amount of time that you're working for them, that they're going to cancel your debt. So remember, if you're in that particular case, the cancellation of debt for those student loans should not be taxable, will not be taxed. So remember that when you get that 1099, or if you do get that 1099, that you explain, that you remember that you go to your tax preparer and you say, hey, this shouldn't be taxed because you worked your service, you did your time basically. So that program allows you to get all of that student loan forgiveness tax-free. But many preparers don't stay up to date with stuff like that, and you want to make sure that you don't pay taxes on something that you shouldn't. The other big one is when you're in bankruptcy. So we sometimes gather all our debt, realize that we're way over our heads in debt, and we need to file bankruptcy. When you file for bankruptcy, that debt you shouldn't have to pay taxes on either. They shouldn't be part of the 1099-Cs. But what happens is a lot of lenders don't really follow that rule. They don't mark a box or something because their computer will spit out 1099-Cs. And so what happens is when you receive that 1099 and you take it to your tax preparer, or you do your tax return, doesn't really matter. The point is that form gets entered into the system. All of a sudden, you're stuck paying taxes on dollars that you shouldn't have to. So one of the things that I tell clients is if you're going to do bankruptcy, you want to get as much of your debt in there and canceled so that all of that falls in the rules and you won't have to pay the taxes on that. So remember, more debt, cancellation, less taxes to pay on those dollars is the key to all of this. But there's a couple of other ways that you can do it. The insolvency is a big one that's missed, meaning your debts exceed your assets. I kind of touched a little bit on that. But put make it like a profit and loss of your personal finances. What all do you have? Your mortgage debt, other student loan debt, maybe you have credit card debt, auto loan debt. And then you look at your assets and you're like, well, what do I have as far as assets? Maybe just your primary residence. Maybe you have a small savings account. But when you look at the two, your debts exceed your assets, and you shouldn't have to pay taxes on any of this debt that was canceled. So those are all important things that we can look at a little bit closer on an individual basis. The message here is for you to make sure that you have someone look at that and not just give the form to your preparer and then get hit with these taxes that you shouldn't have to be paying. So please don't forget to follow us on all our social media platforms, Instagram, Facebook. Sign up to our newsletter where we will drop additional knowledge bombs. Thank you. So if your mindset is ready to excel to the next level and you want to give up the multiple hats to a business who will support you, then schedule a call with us today. We can be reached at 626-825-8249. Please give us a review and share us with your friends and family.